So here in this video, I want to talk about a couple different things. Number one, why I'm so bullish for 2024 and Tesla stock. Now, there's a couple of shocking statistics that I think will blow your mind. They definitely blew my mind. Imagine this. All of the money in circulation, all of the money in bank accounts. Imagine what that number is. Lock it in down below in the comment section. Let me tell you, money market funds are multitudes higher than any number that you are thinking. This is money that is sitting on the sidelines, not participating in our markets. Imagine when that money comes back into stocks. Probably, I would imagine, at some point in 2024. That's number one. The other things we're going to get into are just the course of rates and how rates affects Tesla and how that will be bullish for Tesla. And the other thing that I want to get into is Ron Barron. You know what he recently said on Tesla? I think he makes a very good point that you should specifically pay attention to. We're going to get into all of this and much more here in this video. Hit that like button as well as subscribe to the channel. Share this video with a friend that needs to hear it. And if you guys want to support the channel, come trade with us live in real time. Come get access to all of the notifications I send almost every single day. Link down below in the description of this video. That is trade alerts. That is when I'm buying. Sometimes when I'm selling, it just depends. Selling is a little bit more difficult. That's where you start to get into like, don't follow me. It's not financial advice, so do what you guys want to do. I'm just telling you guys what I'm personally doing. None of this is financial advice, by the way. Do what you guys want to do. Invest your money however you want to invest your money. I'm not a financial advisor. I'm not a financial planner. I'm not a fortune teller. None of that. So do what you guys want to do. Nonetheless, link down below in the description of this video if you guys want to be a part of it or check it out. Let's go ahead and get into it. So let's start with probably the most shocking thing you guys are going to hear in this video. The M1 money supply. This is all of the money physically and in bank accounts out there in the economy today. Defined by Google as, quote, M1 money supply includes coins and currency in circulation. The coins and bills that circulate in an economy that the U.S. Treasury does not hold at the Federal Reserve Bank or in bank vaults closely related to currency are checkable deposits, also known as demand deposits. And simply put, M1 money supply is all currency in circulation. That's the easiest way to boil it down. The sum of all currency in circulation plus the value of most liquid assets at commercial banks, except those held by the government, foreign banks, or other depository institutions. Now, this is a chart of the M1 money supply. And as you can see, really ever since 2020, the numbers here have went absolutely insane. You went from about $3.94 trillion of money out there in the economy to about $20 trillion of money out there in the economy. No wonder you've seen inflation. Today, you're down to about $18 trillion of currency circulating and in people's bank accounts. I mean, no wonder we've seen inflation. You went from 4 trillion to 20 trillion, and what did we expect to see? Now, this is a chart of money market funds, the total financial assets held in these funds. That is the blue line. This red line you can't even see. Well, because money market funds have been growing a lot over the years. What I want to really point out is just the amount of money in money market funds, sitting at almost $6 trillion. Compare that to the M1 money supply, the total amount of money outstanding at about $18.5 trillion. That is a huge number relative to how much money that is actually in circulation. Now, these are separate entities, right? Money market funds is not your M1 money supply. But think about it like this. Your money supply, $18.5 trillion. How much of that money do you think is actually going to make its way into our markets? Maybe 5%. I doubt everyone invests 5% of their money. Maybe like 2%. So a very small amount of your 18 or so trillion dollars that is out there, $18.5 trillion in the M1 money supply. Now, money market funds, this has went from about $3 trillion or so in 2017. Before the Rona back in 2019, you were at about $3.5 trillion. Today, you're at almost $6 trillion. Just since really Q4 of 2020, you went from about $4.8 trillion, and now you're almost at $6 trillion in these money market funds. So you're looking at trillions of dollars that is pretty recently went into money market funds that is no longer buying stocks. And this really comes down to the Fed. That's it. The Fed is why so much money is in money market funds and why so much money might ultimately leave money market funds. You might be asking, what the heck is a money market fund? Well, according to Investopedia, a money market fund is a type of mutual fund that invests in high quality short-term debt instruments, cash and cash equivalents. Kind of like if you wanted to buy some bonds because you're getting 5%, you think that's a sweet deal, but you want liquidity. Well, you might not buy a 1 or 2 year bond or a 6-month bond. You might buy a money market fund that you'll get paid 5%, basically a portion of that, whether it's daily, weekly, or monthly. And if tide changes in the markets and maybe something happens, maybe the Fed cuts rates, you can get out of that money market fund quickly and maybe not lose as much money as your bond would if, the Fed decided to raise rates, cut rates, change Fed policy. It's basically a place to store your money. Now, money market funds tend to see a lot of inflows during weakness in the economy, during recessions themselves, or when the Fed is just raising rates a lot. You've seen this back in 2008. It seems like once you head out of a recession, once you head out of a period of weakness maybe for the markets, you do see a lot of money leave money market funds. You've seen this in 2008. You've seen this a little bit after Rona, but there was still a lot of people that were kind of fearing that second wave of Rona that would shut down the economy. And there's been a lot of fear ever since about a recession. And I think that's why the numbers are so high. You've seen this as well back during the dot-com bust. You peaked out during the recession and then you started to fall. You fell from about $2.3 trillion to about $1.8 trillion. The percentage was huge, right? That was like a 40% outflow of money market funds. If that happened today, trillions of dollars would head back into our markets. Now, I think this in and of itself is going to be a catalyst in 2024. When the Fed does start to cut rates, money will rush out of money market funds and look for a better place to go. And that's probably going to be in stocks, but your high quality stocks at that. When there's uncertain economic times, when the Fed starts to cut rates, investors are going to want a stock like a Tesla that has a lot of growth, a lot of runway for growth, will benefit from rate cuts, but is also a very stable business. It's not going to zero. It's not going bankrupt. You would have to see something wildly crazy happen to see Tesla go bankrupt. And I'm not a financial advisor, but I think that's just a pretty sound way of thinking about a $100 billion plus revenue company. Well, we're going to see that this year with Tesla. Now, I think I should also clarify, because how I just worded that was a little maybe not correct. The markets are not initially going to run to Tesla when we get economic weakness, when the Fed cuts rates. I would expect the narrative of, oh my gosh, nobody's going to buy a Tesla because we're in a recession or heading into one. That is what is going to dominate Tesla's story for a period of time. But as I say all the time, the markets hate uncertainty more than they hate bad news. Or as I usually say, the markets can handle bad news. They cannot handle uncertainty. So once the uncertainty is kind of over and we see how this recession-ish period is really going to play out, maybe the end of this year, heading into 2024, maybe middle of 2024, or end of 2024 for that matter, then investors are going to want to own something like a Tesla. But maybe not initially when the recession fears come about. I also think in Ron Barron's latest interview, he really highlighted something that stuck out to me like a sore thumb. And this is exactly how I've thought about Tesla, and specifically Tesla full self-driving technology.
I met Elon in 2010. It took me 4 years of doing research before we ultimately decided to invest. And we invested between 2014 and 2016. We invested a total of approximately $400 million, $380 million. In 3 years is when we were buying the stock, and that was it. And the average price, and we've made about 20 times our money since then. We made at the peak, and we've probably made about $5.5 billion in profits so far, and I think we'll make another 5 times in the next 7 or 8 or 9 or 10 years. What made us buy it is that he's a mission-driven person. His idea was to try to convert the United States, the world, from using petrol to using electricity. I thought initially it was unlikely he'd be successful. That's when I met him in 2010. 2014, I had become convinced he would become successful. And we invested approximately 2% of our assets at that time, 2% of the $21 or $22 billion that we had under management. We now have about $41 billion. And of the $41 billion, $40 billion is profits that we made for our clients over the past, since 1992. So basically, we invested because I thought there was a big upside. I thought he was a brilliant guy. I still think that. We continue to work on our research in this company all the time. Virtually every week, we're talking to someone there. I was out in Palo Alto a week ago, and I was there for an afternoon, and I met with 2 executives who were the people who were in charge of autonomous driving and also in charge of compute, of what NVIDIA does, the chips. So what we're always doing, we're trying to understand how a business operates and what's special about it and why other people can't do the same thing. And in the case of Tesla, we are convinced that people cannot do what they're doing, and that ultimately it's not just going to be a car company, it's not just going to be a battery company, but ultimately all the other car companies, which 50 years ago elected to become much more profitable and outsource supplies and compute to other people, we're going to be, like Intel was inside of computers, this is going to be Tesla inside of cars. All the cars are going to be using Tesla autonomous driving. No one else can possibly compete.
I really wanted to highlight that because I think it's already happened. What I mean is you've already started to see automakers adopt Tesla's charging network. That's because Tesla was doing this eons before anyone else thought to make an electric vehicle. Tesla was developing its charging network, and Tesla is doing that today in FSD. And it's only a matter of time before that gets adopted from other automakers. It's going to be cheaper. It's going to be more effective. Just a better product coming from Tesla than from other automakers if they choose to go down the path of making their own software. There's a reason why Tesla is not operating robo-taxis yet, and something like a Cruise or a Waymo is. Why? Because Tesla's looking at the bigger picture here. Waymo and Cruise, and they can operate in San Francisco, for that matter. It's one city. Whereas Tesla has, like 500 million miles traveled with FSD. It has far more data than anyone else. It's not even comparable. And Tesla does not have that product yet operational because Tesla is going for the broader picture here. When Tesla robotaxis launch, it might be in a couple cities at first, but it's going to launch everywhere pretty quickly. I know regulation's going to get in the way. Some places are going to be a little bit easier, but you get the concept here. Tesla's going for the whole dang pie. Cruise and Waymo, they just want bites. and they'll never get to where Tesla is. Or maybe I should say where Tesla is going to be and where Tesla's product is going to be. I think a lot of people don't think about this day and age, but in a capitalistic world, in a world where innovation is encouraged, if you are not putting out the best product, you will not survive. If you do not have the safest, the cheapest, the most reliable product, no matter what it is, you will not thrive. I akin this whole FSD technology situation, Cruise compared to a Tesla, as phones. You remember the flip phone, or the sliding phone, the flip phone, the block phone? Well, that is like a Cruise and a Waymo. Those guys. And the iPhone stole their lunch. That's FSD is the iPhone. The other guys didn't innovate. They thought touchscreen phones were not gonna take off. Whoever told them that should have been fired when they said it. But that's the point. Tesla's gonna have the safest, the most reliable, the cheapest software that you can buy. Ultimately, I think safety is probably the biggest factor there. If Tesla just has a safer product, I think that's enough to take the cake alone. And again, that's a big reason why you don't have robo-taxis today, because it's not the safest product that you're going to see, right? Launching today would be a stupid idea. But that's really the point. The best product will win. And I'm willing to make the bet that Tesla will have the better product. So Tesla, years down the line, is going to have probably, I would imagine, a subscription service that is maybe $50 a month, maybe $100 a month, that is going to have millions of people using it. Because, why would they not? Maybe it's something along the lines of $500, maybe $1,000 when you purchase your vehicle that is tacked on to the purchase price of maybe your GM vehicle to buy the software itself, and then get that subscription for $50 a month or $75 or $100 a month. Something along those lines, you could easily see a deal being done. And if that happens, you have not seen a thing yet for Tesla stock. As a Tesla stock investor, that is the big prize at the end of the tunnel, really. And then you have, robots, and you have so many other things going for you over the next couple of years. And I really don't think these things are a long time away. Robots are obviously a long time away. Let's be honest. I would be shocked if anything material comes out of Tesla robots in the next 5 years. 10 years, 15 years, yeah, that's where you start to get into robots and really seeing something coming out of that. But in the next 1 to 5 years, robotaxi as well as licensing FSD. I think licensing of FSD could be even big compared to the robotaxi network. I think they're both huge for Tesla, and I think it's going to be harder to ignore that in 2024. That's just my honest opinion as we get closer to seeing some of these things happen. I'll tell you right now, when we get our first FSD licensing deal, like Gary Black thinks, in 2024, and keep in mind, he's pretty dang conservative with Tesla. I think he has like a $300 price target, $280 price target, something like that on Tesla. Maybe we could double check later on into this video towards maybe the end. Maybe that's the last thing we'll do. But he thinks an FSD licensing deal is coming in 2024. If you get one of those, Tesla stock, my friend, is going to new all-time highs, because that is such a large potential pool of profits. And it's, again, hard to give Tesla the benefit of the doubt when you can get 5% risk-free in a money market fund. That is coming to an end in 2024. If we do start to go into a sharp slowdown, the Fed, is going to cut rates a couple percent, not just 1 or 2 rate cuts. Jeffrey Gundlach thinks you could see a 2% rate cut just to start if we start heading into a recession. That's because inflation, if you're looking at core on your core PCE, is 3.7%. Headline PCE is 3.4%. Fed funds rates are 5.25%, 5.5%. You could see a 2% rate cut and still have some form of restriction on the economy. Or maybe if you want to get super technical, right? If the neutral rate is the inflation rate minus the Fed funds rate, well, if you did like a 2% rate cut, you would be at around the neutral rate today. So I think there's a lot of things going for Tesla in 2024. But to be quite honest, you want a position for these things now. By the time Wall Street figures these things out, and trust me, they will, in my personal opinion. Again, I'm not a financial advisor. Anything could happen. We've seen crazy things happen over the past couple of years. Well, it's probably going to be too late to capture a vast majority of the gains when these events actually do happen. Now, if this video has you excited for Tesla stock next year, or maybe over the next coming years, you really want to stay tuned to the channel for the video coming out at about 9 p.m. tonight. Maybe we'll release that video around 8 or 8:30. Hit that subscribe button, turn on the notification bell, because we're going to dive into the actual fundamentals on where I think Tesla stock could go in 2024. What do the fundamentals themselves, let alone a licensing deal of FSD, if that comes, things we can quantifiably forecast. Well, where does the fundamentals actually put Tesla stock? That's very exciting. And we're going to go over all of that, as well as specifically what I expect from the markets from now, from this point on. What do I expect for the end of this year? What do I expect in the beginning of 2024? What do I expect in the middle of 2024, the end of 2024? All of that. We're going to go in depth in the next video, so stay tuned to the channel for that one. In the meantime, hit the like button as well as subscribe to the channel. Let me know what you guys think about all of this information down below in the comment section. Again, if you guys want to come trade with us live in real time, come get notified every single time I make a trade. Link down below in the description of this video. My name is Michael Tyler. Thank you guys for joining me again, and I will see you in the next one.